All right, so let's talk about trade wars, how it can affect you, your stock portfolio, the US economy, and the global economy as a whole. So let's just jump right into this video. Let's not waste any time. I'm going to try to make this video pretty quick, maybe only a few minutes long, just to sort of give you an overview of what a trade war is, the pros, cons, mostly cons. There's like that much of a pro. All right, so I really don't want to get political here. I'm going to try to be as neutral as possible here. I'm really sorry if I offend anybody or if people disagree with me, because whenever you talk about macroeconomic events, there's always going to be somebody who disagrees with you in one way or another. So these aren't 100% facts that I'm giving to you. I'm just going to give you different varying opinions from this, and sort of you can create your own opinion from this. So like I said, trying to be pretty neutral here. Let's get into this video. All right, so the first thing that we need to do is understand what a trade war actually is. And it really stems from trade protectionism, which at first isn't too bad. It's when countries want to protect their own industry, foster their own industries, and so what they'll do is they'll impose these import tariffs on other countries' goods that are going into the domestic country. So for example, the US would impose steel tariffs, for example, and that means that if China wants to import steel into America, there's going to be a tariff imposed on that. So you're going to have to pay more for Chinese steel if you live in America because of this tariff. It's sort of like a tax, okay? And so this, in a sense, would help out US industry, the steel industry, because it would enable them to compete with Chinese competitors or other global competitors. But there's a lot of cons to trade protectionism, because what happens is, for example, if the US imposes these tariffs on certain imports from certain countries, what happens a lot of the time is other countries will impose tariffs on US goods going into those countries. So for example, since Donald Trump imposed these new tariffs, China responded by imposing some $3 billion on certain products in tariffs for, I think it was wine, food, certain steel products actually going into China, and then also Europe threatened to retaliate as well. And this is really how trade wars can sort of occur, because I sort of like to think of it like, say you're on the playground in first grade and your friend just gives you a little nudge. He might push you a little bit, and so you push him back a little bit harder, and then he pushes you back even harder, and then you push him back even harder, and then all of a sudden, before you know it, you're just like shoving each other and fighting with each other with one of your good friends for not really any reason other than just it sort of escalates. And you can probably relate to that pretty well. That happens sometimes, where you don't really mean to get into a fight with someone, but you just keep pushing him harder and harder, and then all of a sudden you're in a full-out fight. Now, trade wars generally don't end up in military conflict, but that's sort of how I like to think of trade wars, because really they don't start off too terrible. It usually starts off pretty small. Somebody puts a tariff on certain products, and then other countries start retaliating, and then what ends up happening is all these countries start putting these import tariffs and blocking off trade and really protecting their own countries. And you don't have to be an economist to understand that trade in general is going to be beneficial for economic growth, for global economic growth. You can take an Econ 101 class in high school or in college to understand that trade is almost always going to be beneficial in terms of growth. And that's why you probably have seen the stock market in the US really dropping in the past week pretty significantly, because people are scared of a possible upcoming trade war. So whenever we're looking at global economic events, one of the best ways to sort of predict the future is to look back into the past and understand what happened in previous trade wars. So probably one of the most notable trade wars, at least in the US, was really occurred after the Smoot-Hawley Act in 1930. And this is actually an act that really has been thought to sort of drag out the Great Depression and made it a lot worse than it really needed to be. And so what happened in the 1930s is they imposed this Smoot-Hawley Act, the US did, and it ended up actually really hurting US industry. Now initially it was to protect US farmers, but it ended up hurting the US as a whole, and actually the global economy, because global economic trade completely just fell off a cliff after the Smoot-Hawley Act and a chain of events that really occurred to sort of block off global trade, and countries stopped trading with each other and focused on their own country. And that has its pros and cons. It's mostly cons in reference to global economic growth. That's like the biggest key you want to take from this, that global economic growth over the long run will likely be hindered when you impose all these tariffs on each other, when you have this massive trade war. Now, we're not currently in a massive trade war, but that's the biggest threat here that people are concerned about. Now, like I said, I really don't want to get political here. I'm trying to stay neutral, but let's just examine what Donald Trump mentioned in a tweet, I believe on March 2nd. He mentioned that trade wars are good and easy to win. And so to sort of pick this apart a little bit to understand what he's trying to say. I think what he's trying to say is that the U.S. has a trade deficit of about $800 billion. And so trade deficits, this is actually something that economists can't entirely agree on, whether or not trade deficits are actually a positive or a negative for an economy over the long run. And I'll leave some links for that down below because there are arguments on both sides. But the general consensus is that trade deficits are not going to be very beneficial for an economy, especially when you're running a very large trade deficit. And if you remember back to Donald Trump's campaign, I think in 2015, 2016, trade was something that he was really running on, saying that we don't have good trade, that the U.S. has a massive trade deficit. And that is true. They do have a very large trade deficit. So I think that's what he's referring to when he says that trade wars are good. But on the contrary, trade wars, they're not going to be good for global economic growth. And really, there's no winners in trade wars because everybody's growth is going to be slowed down for the most part when you have trade wars. So I really hope that leaders throughout the world are smart enough to not end up in a trade war. That would just be bad for economic growth, for global economic growth. It just wouldn't help and it would just hinder everything, and it's just not fun to get into trade wars, and there's really no reason for it. So I really do hope that world leaders can figure this out. The World Trade Organization is in place, but how much power do they really have? Not a ton, and they're also pretty slow with decisions, so keep that in mind. But generally speaking, you can see that, personally, you cannot personally affect whether or not a trade war actually occurs. You watching this video right now, me standing here making this video, we can't personally affect whether or not a trade war occurs. It's not in our power. So because we can't actually affect what's going on here, I think it's important to remember to not focus too much on macroeconomic events. So as Jeremy from Financial Education summed up pretty well a few days ago in one of his videos, he mentioned that there's always going to be some type of issue. Every single year there's going to be some scare that's going to prevent people from investing into the stock market. For example, last year it was nukes with Kim Jong, and is he going to nuke Guam? Is he going to nuke Hawaii? How's that going to affect the economy? And obviously nukes aren't going to be helpful for the economy, but that was the big scare there. People were very scared about that, and every year, if you go back in time, every single year, there's going to be some big major concern that's going to stop people for months and months at a time from investing into the stock market. Now, I'm not telling you to go out and put all your money in the stock market right now, but what I'm saying is that there's always going to be issues, and that's why I like to do some dollar cost averaging. So every month I invest into the stock market, regardless of macroeconomic affairs, what's going on in the world, because I like to dollar cost average. And I also think that you can always find companies, you can always find undervalued companies, regardless of where the economy is, regardless of where the world is. As long as we're not in a full out apocalypse, there's always going to be companies, actually even if we are in a full out apocalypse, there's always going to be companies and businesses that in some way are thriving, okay? So even if you go back in time, you look at the Great Depression when things were terrible, but at some point, at some time, there were companies during the Great Depression in the bottom of the trough that were actually thriving. Now they were very far and few between, but they did exist, and so it's obviously very difficult to find a company that's going to be thriving during a very bad economic time. But that's sort of what I wanted to bring across here. Just don't focus too much on macroeconomic events. That's something that so many people just focus on so much, but it's not in their control, and it's so difficult. It's so difficult to predict macroeconomic events. That's why somebody like Warren Buffett, he's got what, 80, 90 billion dollars. He's one of the most successful investors of all time. He says this as well. He says don't focus too much on macroeconomic events. So obviously he probably personally is interested in the trade war. He's probably interested in knowing what's going to happen, but he's not focusing too much on it, and he's not letting that get too much in his way when he's thinking about investing in the company. So keep that in mind as well. I think that kind of wraps up this video. If you have any questions or comments, just leave them down below. I'll be happy to get back to you. Like I said, try to stay kind of neutral on this. I might have said something that you disagree with, and I apologize for that. I'm going to leave just a ton of links down in the description below, because there's a lot of different varying opinions and facts and whatnot on trade wars, trade protectionism, and how it can affect the global economy and the US economy. So that's it for this video. I'll see you next time.